Hey, everybody, this is Lee Seiler, also known as the Stock Doctor. And I wanted to talk about what I've seen in the markets over the last few weeks since my last video. No surprise here. We see the market broadening out, which means it's not only being led by those top tech stocks, the NVIDIAs of the world, the Broadcoms, the Teslas, Microsoft, which, by the way, Microsoft's struggling right now, but we'll talk about that in a little bit. It is broadening out. We're seeing staples having a great year. The banks are still a little firm here. Small caps. I talked about small caps back in January, thinking that they would lead the way. They continue to do so. I do like small caps. I do like quality small caps. All right. I don't like the junk stuff. I don't like the penny stocks. I like the small companies that are under $5 billion, but have strong cash flow, have low multiples, that are profitable. That's what we're looking for our clients. But let's talk about what I see. A lot of volatility, despite the Dow Jones hitting 50,000 for the first time ever. All right, hooray. That's not so relevant. The more relevant part is the S&P 500 and the broadening out that I'm seeing there. So what that means is the love is being shared to the rest of the market. So there is the S&P 500, and there's another index, is the equal weight S&P 500, which takes those 500 stocks and weights them equally, unlike the traditional S&P 500, which rates NVIDIA, Microsoft, Apple as the biggest ones, and it goes down, down, and so forth. The equal weight is crushing because those other stocks that don't get that weighting are doing extremely well. So, what does that mean? That means value stocks are performing, dividend yielding stocks are strong, and this is a midterm election year. And in history, the midterm election years have the longest or the furthest drawdowns. What that means is the average corrections distance of a midterm election year is about 16%. Last year we had a 20%er. Okay. So, like I said earlier, volatility is probably going to get worse. We saw that last week when the Dow was down 800 points. Again, not so relevant, but I know that's what you guys hear on the news. And then the Dow back up 1,200 points. That kind of volatility tells me something underneath is shaky, and I'm not crazy about it. So I'm being very selective in what I buy. I have a short list of stocks that I'm looking at to buy or am buying. And I still continue to add protection to the portfolios. And I think protection is paramount here. What you don't want is go out there and start buying and get feel that FOMO that you need to own something and chase it. And then the bottom drops. Look, and when the bottom drops, it's going to be nasty. It's going to be painful. I don't think it's going to be long lived. All right. So if you have time in the market, all right, because we talk this, our philosophy is not timing the market, it's time in the market. So if you need your money in a year or you need to start drawing income very soon, you probably shouldn't be in stocks. You should be more in something other that draws dividends, some bonds, other types of fixed income, things like that. If you have questions, please call our office. We'll direct you. But we're all about risk mitigation right now. And yes, we are investors and we are long-term investors and we are invested, but we are very, very cautious on new buys. I said I have a few that I'm buying right now and I like because I think they're value and I think they don't have a lot of downside. So I'm looking for companies that have reported good earnings that maybe dropped on those earnings just because the street didn't like it because the street is finicky. So they may have said something in their conference call, a word that didn't sit right with the analysts. So we like to sieve through those and find those hidden gems. And we've been successful doing that. So going forward, just be a little bit cautious. Especially, I'm telling you, we're going to see one. Last year it was in April. We had a 20%er. I'm not predicting when it's going to happen. I'm just saying there's a high probability. Now, the good news is the January effect worked out positively. For a while there, it was hit and miss. And the January effect means that when the market or the S&P 500 closes positive for the month of January, there is a high probability that stocks will close at higher levels by the year end. That doesn't mean we're not going to have intra-year volatility. We are. So look for stocks that pay good dividends. Don't forget about your fixed income. If you are a balanced investor, there's some great fixed income opportunities out there. A lot of bonds are trading at discounts that rates start dropping, you may get an opportunity to make some capital appreciation on your bonds as well. Speaking of rates, the Fed did nothing this last meeting. And we know that Jay Powell's probably out in May. So we probably saw the last of Jay Powell's rate cuts. So percentages say there's a 62, 70% chance for two more rate cuts this year. Again, I want to explain that. Just because the Fed cuts rates 25 basis points or 1/4 of 1% does not mean mortgage rates go down. In fact, doesn't mean it at all. The only thing that's going to go down, because remember what the Fed funds rate is, it's overnight lending banks charge other banks. You can't get much shorter term than that. So it's very, very short term interest rates. Those, however, will affect your credit cards, your car loans, because they're a little bit shorter term. Unfortunately, it also affects your money markets, your savings, things like that. So money markets have gone down as they cut rates. So there's probably better and more attractive places to put your money than money markets, where you have a pretty close risk situation. So we can talk about that. And again, just be diversified. All right. Watch your portfolio. If you need somebody to watch it, call our office. This is what we do, and we are damn good at it. 407 831 8002. Get you in touch with my office. Feel free to ask for me. Feel free to ask for somebody in my team, and we will get with you and answer your questions. I'm Lee Seiler, the Stock Doctor. I'll talk to you soon.